Global remittances, money sent by migrants to family members in their home countries, are a critical financial lifeline, especially in developing economies. Traditionally dominated by banks and services like Western Union or MoneyGram, this $800+ billion industry has long been plagued by high fees, delays, and lack of transparency. Cryptocurrency has emerged as a disruptive force in the remittance space, offering faster, cheaper, and more accessible alternatives. Blockchain-based systems are increasingly being adopted to bypass intermediaries and democratize cross-border payments. This video explores the top 10 transformative impacts of cryptocurrency on global remittances, showing how digital assets are reshaping financial inclusion, reducing friction, and empowering communities worldwide. 1. Significant reduction in transaction fees. One of the most immediate benefits of cryptocurrency in remittances is the dramatic reduction in transaction fees. Traditional money transfer services can charge anywhere from 7% to 15% per transaction, which cuts deeply into the money received by families. With cryptocurrencies like Bitcoin or stablecoins like USDC, fees can drop to fractions of a percent, particularly when using Layer 2 solutions or blockchains designed for speed and affordability like Stellar or Ripple. These cost savings are especially impactful for low-income families relying on every dollar cent. 2. Faster cross-border transfers. While conventional remittance systems may take days, especially when processing through multiple banks or currency exchanges, cryptocurrency enables near-instantaneous transfers. Once a transaction is confirmed on the blockchain, the recipient can access the funds within minutes. This speed is especially critical during emergencies, such as medical needs or natural disasters, when delays can be life-threatening. Fast transfers also reduce the uncertainty and stress often associated with waiting for funds to arrive. 3. Bypassing banking infrastructure. Cryptocurrencies provide a lifeline to the unbanked or underbanked, a group that includes over 1.7 billion people globally. In many developing countries, banks are scarce, fees are high, and access is restricted. With just a smartphone and an internet connection, users can create a crypto wallet and start receiving money without relying on traditional financial institutions. This decentralized approach is particularly valuable in rural areas or politically unstable regions where banks may not be present or trustworthy. 4. Enhanced transparency and traceability. Blockchain's immutable ledger ensures all transactions are recorded and verifiable. This transparency enhances trust and accountability in the remittance process. Unlike bank transfers that may pass through several intermediaries, each charging fees and potentially introducing errors, crypto transactions are recorded on a single, auditable chain. This reduces fraud and corruption, particularly in regions where financial institutions are less regulated or more prone to manipulation. 5. Support for stablecoins to avoid volatility. While Bitcoin and Ethereum are known for their volatility, the use of stablecoins such as USDC, USDT, or DAI in remittances offers a solution. These digital assets are pegged to fiat currencies like the US dollar, ensuring value stability during transfers. Migrant workers can send stablecoins with confidence that the funds won't lose value before reaching the recipient, a key advantage over other cryptocurrencies and sometimes even over unstable local fiat currencies. 6. Empowerment through financial inclusion. Crypto remittances empower recipients by giving them direct control over their funds. With traditional systems, users may have to wait at a bank branch or use a local agent, often incurring extra costs. With crypto, recipients can access funds 24/7 and decide whether to spend, save, or convert to local currency. This financial autonomy is transformative, particularly for women and marginalized communities, who are often excluded from formal financial systems. 7. Circumventing restrictive financial policies. Cryptocurrency provides an alternative channel for sending money into countries with capital controls, economic sanctions, or strict currency exchange laws. In nations like Venezuela, Nigeria, or Lebanon, where the local currency is collapsing or the government restricts foreign transfers, crypto becomes a tool of economic survival. It allows migrants to support families despite government roadblocks, giving people more control over their economic future. 8. Creation of peer-to-peer remittance platforms. The rise of decentralized peer-to-peer (P2P) platforms like Paxful and local bitcoins has further democratized remittances. These platforms allow users to match directly with senders or receivers, avoiding banks altogether. Transactions are usually completed using stablecoins or Bitcoin, often with escrow services to ensure trust. Such P2P systems thrive in countries where traditional payment rails are unreliable or completely absent, opening new pathways for financial resilience. 9. Lower risk of currency devaluation. In economies suffering from hyperinflation or rapid devaluation, such as Zimbabwe or Argentina, receiving crypto instead of local fiat helps preserve the value of remittances. Recipients can hold digital assets or convert them into more stable fiat currencies when needed. This allows families to maintain their purchasing power and even save for the future, unlike with rapidly depreciating national currencies that lose value almost daily. 10. Boosting local crypto economies and innovation. Widespread crypto use for remittances is spurring innovation in developing regions. As people receive and spend crypto, local merchants begin accepting it, startups launch new wallet services, and governments start exploring regulatory frameworks. Countries like El Salvador and the Philippines are already seeing a rise in blockchain innovation tied directly to remittance demand. This economic ripple effect stimulates job creation, education, and digital literacy in previously underserved regions. The impact of cryptocurrency on global remittances is nothing short of revolutionary. By slashing fees, accelerating transfers, and promoting financial inclusion, crypto is not just improving how people send money, it's transforming lives. Especially for those in marginalized or economically unstable regions, the ability to receive fast, secure, and low-cost payments can mean better access to food, education, and healthcare. As the infrastructure and adoption of crypto remittance solutions continue to mature, we are likely to see even broader societal shifts, empowering millions with tools that traditional financial systems have long failed to provide. Cryptocurrency isn't just changing how money moves, it's redefining who gets to participate in the global economy.